Yeah, I think that's one of the most important points, because one of the questions I get a lot is how to choose a good accountant or tax professional, and that's really the starting point. I mean, I hate the type of accountant that say, "Well, drop your stuff off. I'll call you when it's done." And I says, if you get somebody that wants that, run the other way because they don't care. You're just a number to them, and you're paying these people good money.
Are you tired of working more for less profits in your home service business? What if I could show you $100,000 in hidden annual profits in your business in less than 3 minutes? Would you be interested? And not only show you where, but how to create that 100K in 6 months or less without additional advertising or marketing spend guaranteed. Just go to sharpenthespearcoaching.com to see how truly simple it is. That's sharpenthespearcoaching.com. Do it now.
And welcome back to STS, Sharpen the Spear podcast. I've got another incredible guest. Roger Pearson joins us today. What a lineup we've had, and Roger is no exception. This is going to be fantastic. And as always, no one knows Roger better than Roger. So Roger, bring us up to speed. Give us a little backstory. Let us know what we're going to be talking about today. Let's talk about your expertise, and we're going to get into it. So take it away, Roger.
All right, Richard. I'll tell you, I started my business career about 54 years ago. So I've learned what I don't like to do very well after trying many, many, many different businesses. But a couple of decades ago, I got, just because I didn't know what I wanted to do at the time, because I'd been downsized 3 times in the 90s out of management jobs. And I said, I don't know if I want to go back to corporate America, but somebody suggests I take a tax course and take a part-time job doing taxes for people just to make money until I decide what I wanted to do. And I've found that it's one of those turning points in your life that I found something I really, really enjoy is helping people and educating people. And with my business background, I quickly started specializing in small business returns. And for 22 years now, I've been helping small business people save money by using the IRS's rules to their favor.
I like that. I love it when they say use the IRS's rules to our favor. That's just a topic in itself. I like that a lot. So I love it. It's 22 years. 22 years now you've been doing that.
I'm amazed at it myself.
Yeah, I'm in awe because that's not something I could have done. But I'm glad there's people like you out there who can do that. Yeah, I tried to keep as much as I made possible in business too, and that's not an easy thing. And that's why I want to talk to you about this stuff because, I went through a number of accountants, I'm air quoting accountants, right? And there's all kinds of different levels of that, right? So it's a challenge for every business owner. So I'd love to just start getting your insight on some of the basics you do, how this kind of works. We don't have to go into minutia, but, we'll keep it high level. But I really want people to understand there's a way to do this, right? There's people like you out there to help them. So let's get into that a little bit.
There is, and probably the hardest thing is finding the people. It really is. There's tons of accountants and there's tons of tax preparers, but what one is right for you? And I begin at the beginning that, number one, your accountant and your tax preparer do not have to be the same person. In fact, oftentimes you may want to have different people in those roles so they can cross-check each other and they don't become complacent. So it's such, and that happens. It becomes complacent, just, oh, yes, this is another client, just do boom, 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 boom. And you don't want that. I think the most important thing in choosing somebody to bring on your team as your accountant or your tax preparer is if they have any interest in learning your business. Because I know for me to do the best job I can possibly do for my clients, I have to learn how they operate their business. So I've had to learn plumbing businesses and landscaping businesses and home chef businesses. And, I delve into how they operate, how they think, how they want to, what they want to achieve, what direction they want to go. Having a business background, I probably do that more than most tax preparers, it's just another job too. But I come from the point is if I'm going to do the best job for them, I have to learn their industry and how they work and what their goals are for the future. And taking all of that knowledge, then I can produce a product that is going to best suit their needs.
Yeah, I love that. That is, of course, that strikes a chord with me, being a business coach too. We need to learn their business. I think that's the key takeaway, what you said, because, and I don't know if you told me this, I heard it recently, and it might have been when we talked last, but a lot of accountants, they're more into compliance. So they're basically trying to make you compliant, right? If from a tax standpoint. So they don't necessarily have the interest in the actual business, because they're kind of plugging numbers and filling boxes and things like that so you don't get in trouble. So I think it's really important if you can find someone like yourself, Roger, who has an interest in your business from the standpoint of understanding it, right? Like you could care, you don't care how well they cut the grass per se, right? Like I hope you do a good job, but you really want to know the ins and outs. What does this really take to do this, to perform this service or produce this product, right? I think that's really good. So I'm glad you mentioned that, because I think as I went through a journey looking for someone who understood my business, it actually became a client. They were a client of mine first for water features, right? So I built them this incredible water feature and then a pool and all this stuff. Then they became my tax accountant. And there was, just by what you said, I look back and go, well, that gave me a very unique insight in what I do. And he started doing things differently than the other accountants I had. So I really love that point.
Yeah, I think that's one of the most important points, because one of the questions I get a lot is how to choose a good accountant or tax professional. And that's really the starting point. I mean, I hate the type of accountant that say, well, drop your stuff off, I'll call you when it's done. And I say, if you get somebody that wants that, run the other way, because they don't care. You're just a number to them,
Right.
And you're paying these people good money. You need something more than that.
Yeah, for sure. I think it's, I think, Roger, if you're in business, you're dealing with vendors, an accountant is a vendor, okay? They're performing a service for you just like a cabinet supplier or a mulch supplier, whatever it might be. There's always relationship involved. Okay, you have to create relationship in all of your vendors, suppliers, things like that, because when you do that, they also get more unique insight. They know a little bit more about you and things like that. So I think it's obviously the thing, drop your stuff off, I'll call you. That's definitely a red flag. Okay, and I'm with you on that. So let's talk about a little bit about the relationship aspect between you and your clients. Kind of how does that work? You get to know their business. Like, I'm just trying to understand the relationship, because I think it's a powerful thing, and I'm not saying like, hey, let's go to dinner every Friday, something like that, but there has to be some kind of connection, right?
I think so. I think it all comes down to, I think, because I care about them. I want to see them succeed. I want to help them succeed as a member of their team. They're paying me to do this as a member of their team. I want to help them succeed. And that's the type of person you want. Somebody that wants to help you succeed, not just do a service for you, but actually become like a team member of your business. I mean, and these people are hard and they're rare to find. They really are, but they're worth the search.
Yeah, I agree, because as a coach too, it's the same thing. I get so much joy out of my clients succeeding. Feel like getting their freedom back, systemizing their work, working less, spending more time with their family, because they dial in their business. That's like my real reward. Yeah, I get paid for it, but the joy comes from that when their wives call me and say, I never thought this was possible. We just spent 2 weeks on the beach with all 5 kids. He was never on the phone. She goes, that's amazing. 8 years in business, never thought that was going to happen again. So that's what you do it for, right? You want to do it to give them that kind of accomplishment, and keeping more of your money adds to that. Right?
Absolutely. Well, it not just adds to that. I mean, it adds to the stability of your business. It can make the difference whether your business fails or succeeds. And I've one of the biggest people going into business, one of the first times, one of the biggest shocks to their system, if they've never done this before, is that when they sit down and do their taxes for their business, they find out that 40 to 50% of their taxes can go to, the net profit can go to taxes. And it just freaks them totally out. and at some point, I'm sure that some people give up at that point. And he says, why am I going to do all this work if I have to give half of it to the government? But, there's ways to mitigate that.
So the 17-year-old son, working hard, super hard worker, he's putting in like 95 hours a week for this company. It's kind of a seasonal thing to do, about 4 months a year. So he's expecting that big check, $1,000 they took out of his check just because oversight. 50. He's just like, Dad, I go, welcome to America.
Exactly.
Just like, now you know you've been hearing for 17 years. Okay. It's brute. He goes, I go, you're punished. You're punished for working hard. It's terrible. So it's just, but I think maybe it's not quite right, but you kind of had that little giggle that when they had the light bulb moment, you kind of say, now you understand. Okay. Right. I had a couple employees like that too. Same thing. These guys were from Mexico, live here legal, everything else, but we ended up working a lot of overtime in the spring and they saw the check. They're like, what is this? Or then they bought like a 4-flat and the taxes and they go, they go, welcome to America, my brother.
Exactly.
They get that slap like you think it's all just, and again, that's why we need guys like you. Because there's a lot of legal ways to keep a lot of your money. And it's so important that you people do your research, find people like Roger, because, imagine over 10 or 20 years, how much you're leaving to an irresponsible individual called the IRS.
Yeah. We can find better ways to spend the money than the government can. That's for certain.
Darn Skippy. Yeah. So I love it. I think, so let's talk about this. So this is kind of more on the tax side here, because there's tax planning, tax strategy, there's taxes, there's tax accounting. Okay. And these might not be the exact terms, but you get the idea what I'm talking about. So with you, Roger, are you doing kind of tax strategy as well? Like really finding places well in advance what to do with this money so it avoids or delays paying the tax, or is it literally being able to keep it as money that isn't taxed? Am I making sense?
Actually, a little bit of all of those things. I mean, a good tax preparer is going to do, For instance, there's things called depreciation tables. If you buy something, equipment or something, computers, whatever the case may be, over $2,500, you have to spread the deduction for that out over several years. It's called depreciation. Like a computer is a 5-year depreciation, office furniture 7 years, But there's ways to accelerate that depreciation where you can claim it all now, or you can use a 179 claim part of it. So part of the strategy with clients has to be that, okay, and this is why you have to know the business, so why you have to learn the business, because, okay, this is what your net profit is this year. All right, so what's happening next year? Do you have some big contracts coming in next year that we're going to need more deductions for next year than this year? What's your future look like? What's your game plan in the next 3 years, 5 years? Where do you want to go? So how should we use this deductibility? Whether we want to use this year because you had a good year this year, we may need it all this year. Or do we want to spread that out into future years or just next year? There's different ways to do that. And this is what the big corporations do. And that's why they hire all these fancy tax preparers for big corporations. They use the tax laws and things like depreciation laws to manipulate, I had one gentleman, he was a painting company, and he wanted to buy the house that he was living in. But when you're self-employed, the banks aren't really lining up to give you a mortgage. They want to see 3 years worth of tax returns for your business to see if you can pay back this loan. And he told me the net profit range that he needed to be in for 3 years. And so I worked with him and using depreciation and other things like that to where he met those. We kept his net profit within the range that he needed for the 3 years, and he was able to buy his house. But it took us working together like that to determine how to do that so he could accomplish his goals. And that's why when I talk about somebody that's interested in your business and what you want to do and where you want to go, those are the type of things that a good tax preparer can help you do if you want to build that relationship with one.
Yeah, I like that. You know why I like it a lot, Roger? Because we're teaching strategy all the time when I'm coaching business. The strategic aspect is very important to us, and we build and we forecast. We want to, what are we going to do in the future? And I love that this is part of that strategy, right? Because this falls in line with strategy. You have to, like you said, what is coming down next year? I remember 2008 after the election, I lost $500,000 that I had booked for the next year for 2009 on November 5th of 2008. Everyone canceled. And it just kept going from there, right? So I had forecasted to do X, have $1 million plus already locked in by January, and that didn't happen. And it was the end. Okay, so when we look at forecasting and preparing for things, like you're saying, from the tax standpoint, is really important, because there's times when I bought large equipment, $50,000 piece of equipment, a $70,000 piece of equipment, talk about depreciation. Like, I always paid cash, which I don't think was the best thing to do, but I did it, but I didn't think of like what I could actually do with that, by putting that in there. So I had to try to get strategy as well, but I didn't do it well because I didn't have the right guy telling me how to do it, and I probably didn't know enough to look for the right guy, if I'm honest about it. I didn't know that's an option at the time. At that time, I think I just thought accountants were accountants. I was learning, because I was on my third one, that they're not all the same, but I still was not maximizing the ability to keep so much that I had earned. So,
correct.
Yeah, I like that. Yeah, sure. Yeah, that's great. So, in those cases, when you're looking out, do you go out, you go year by year? Do you try to go out a couple of years? Do you set long-term strategies? Like, hey, what are we going to do with this? Is there something in that, or is that another financial sector? Like, you're going to help them keep that money, defer those taxes, avoid the taxes. Is there like playing, now we'll do this with that? Or is that out of your realm and that gets handed off to someone else? Is that more investment strategy, or how does that work?
As far as, a lot of times, small business people, especially when they get first card, they don't even think of these things,
I know.
So part of my job, I think, in that respect is that a lot of people, the only thing they think about is the next year. And if that's where they're at in their journey, then that's what we need to talk to. If they're looking out 5 years in their journey, then that's what we need to talk to. Because I have to talk to them where they're in their business journey and give them the things they need to think about in the future also. Because a lot of times when they sit down with a lot of these small business people, when they got started out, when they sit down with me, I'm probably one of the few people that's going to actually sit down and give them actionable advice that's based in reality and based in experience. Because most people don't go out and find a mentor, They wouldn't even know how to start doing that. And so to a lot of these people in the aspects of business foundational, I'm their mentor, because they sit down and they bring their questions to me. And I hear from them during the year often, asking me a question here or there also. So it's important, You have to kind of think of that also. If you could find a mentor for your small business, that's awesome. That's awesome. But those are hard to find too.
Yeah, that's for sure. And then you got to be willing to listen.
Well, that's
too good at listening.
that's true. I've had those that wouldn't. Yes. I'd be one of those. 20 years not listening to brilliant people, because I thought I knew it all. Pretty stupid. I was kind of an idiot. But what we do now too is when we look at growth strategies, so we're building strategies for companies, and it's a big thing on this from the tax standpoint. For one, like if we're projecting how we want to grow. So we've got a strategic vision. We understand where we want to go in the next 18 to 24 months, 3 to 5 years. We never really get past 5 years. We can have an end goal, like an exit strategy, kind of a long-term thing. But I always found now that you get past 5 years, too many things change. Too many pivots. The economies, the world things. So it's not really productive to go out further than 5. I kind of like that 2 to 3, 2 to 5 range. To get them set in there, because if they understand the growth strategies, if they came to you with a 5-year growth strategy on what they're projecting, right? They've been in business, say, 3 years, right? They got a pretty good handle. They're moving things are systemized. If they came to you with, look, Roger, here's my 5-year plan.
we're looking at about a 12% growth each year over the next 5 years. You can look at that and say, okay, now you can develop a plan, right, and how things are going to be, relegated to this and that and distributed and whatever that looks like, right? Is that would that be an ideal situation for you, having a plan like that?
It would be, but that's rare. It's rare. Right. It's rare. Most small business people don't look any further. Yeah. Most small business people don't look any further than the next year, if maybe 2 years. That's it. And I can understand it because if it's the first time you've done it, it's a big learning curve. It's a huge learning curve because these things are not taught in our school systems. Absolutely. They're not even taught in the college systems. College teaches you how to survive in the corporate world, not small business world, which is a shame because small businesses are the backbone of our economy. They are the backbone of the economy. Mm-hmm. And if you took them away, we wouldn't have one. And you would think there'd be more emphasis on teaching people the proper structures of business. And it's a shame.
It is, because it makes it so, and that's why the failure rate's so high.
Yes,
because no one knows.
Absolutely.
97% fail in the first 5 years. So I was doing a webinar and I had that stat, and then my next slide was a picture of the Navy SEALs running with the boats on their head. And I said, you got a better chance of becoming a Navy SEAL because they only failed 90% of the people. So,
right.
So you got a better chance of becoming that than you do having a successful business, because today is a little different, Roger, because of the internet, because of coaching, because of the access to content, right? So you can learn on your own way more than a college would teach or anything else. You can kind of get some real world help, but you're still fishing. You're still trying to find the right stuff, what really fits and everything else. So it can be a real challenge. I do a little bit of work with startups, but it's difficult. Also, just like they don't think more than a year ahead when they're doing business, when you're a startup, you don't have any scars. You haven't been beat up. You haven't lost money. You haven't done stupid things yet. So you don't really value like guys like us maybe, from the mentor position, a coach position, a tax pro, and that kind of stuff. So you kind of there's a catch-22 there. You really want to help them, but it's really hard to help them because they're just they got the napkin and they got their idea and they can't go much further than they don't have any money. And then it's a real challenge. But the ones who will kind of dig in and really kind of pursue it and listen, they can do well and they'll make it. But the numbers are still, like you said, really, really small. Just because I didn't have any business experience. I came out of the Marine Corps. I was working a pickaxe. I decided to become an entrepreneur because I shoveled 35 tons of gravel into a wheelbarrow and brought it to a backyard and made $1,000. Meanwhile, I was getting paid $5 an hour to do the same thing the day before. I'm like, I know my future. Okay, whatever it is, I'm going to figure it out because I want to make that kind of money. So it was, so that was my business experience. And I just kept falling down and getting back up, trying to figure the stuff out. And there was no internet back then. So we didn't have the luxury. We just got to go out and lose money and figure it out, try not to do it twice, right?
Exactly. I've lost my share also.
That's what makes us. That's what builds you. You got to lose some money once in a while. Not all of it, just a little bit. It builds fortitude. So what other things would you suggest for people? Let's stay on this little path of the startup. So someone's in there, let's say they've come off the idea stage and they've launched either a side business, right, a little side hustle kind of thing, or they've actually making a full leap into a full-time business. And let's keep things simple. It's a landscape business. Relatively low barrier to entry. They can get in. They can start making sales, cutting grass, weed whipping, doing whatever they're doing. That's a good thing. So in the beginning, so they're in the first 6 months having a business, let's say, Roger, give me three simple points like that they never think of, right? That if they just would think of three things when they first start, they're that much further ahead from the tax standpoint. What would something like that look like for them to do?
The first thing is you have to address your accounting system. You have to have an accounting system, absolutely positive. I don't care if it's just a spreadsheet. In fact, when I get youngsters that come in, I teach them how to do an accounting system with a spreadsheet first. Because if you understand how to do it on a spreadsheet, the software is going, when you get to software, it's going to make a whole lot more sense. you know,
Right.
and keep receipts. Don't throw them all in the box, you know, but keep the receipts. Your checking account statement is not your accounting system, because, you know, and people think, well, why not? Well, you know, it shows on your bank statement you bought at Walmart. How you know, an auditor is going to ask you, well, was that personal or business? How are you going to prove it's for business if you don't have the receipt showing what you bought? Because the bank statement's not going to show what you bought. Little things like this. A lot of self-employed people, salespeople, landscapers, plumbers, whatever's, they drive a lot, you know. They got to drive from client to client to client. They don't keep track of their mileage. You know, the mileage deduction in our tax system is one of the best deductions that there is. Absolutely. You got like 65 cents a mile adds up in a hurry.
Yeah.
And the IRS expects when you deduct that deduction, they want to see a log that says the date, the number of miles driven, and the purpose, business purpose for that, you know. And we got some wonderful software options nowadays. We've got apps on our phone that you can hit the start button and the stop button, and you can print it, type in what customer you saw, whatever the business purpose was that day, and it generates a report for you at the end of the year. I mean, how easy can that get? When I started out, we had to do everything on paper with a notebook that way, and it added up. And so those are the two most important things that a business person has to, because if you don't want those two things, and I see so many people, they don't do those two things, and they end up losing thousands of dollars, you know, their first year. You know, because, so those are probably the two most important things there.
Yeah, that driving app, like, and I give my own experience, and this is just a cautionary tale. You got to do the work. Okay, yes, it's easy. You got to hit the button, then you stop the button. But you know what you got to do? You got to hit the button, and you got to stop the button. You got to make it a habit. This is how you operate when you're in the vehicle. Okay, if you're in business time, got to do that stuff. But there's same thing with receipts. You can scan them right into your QuickBooks now or whatever, you know, and it'll say what it is. You can put in what it's for. So you get some, you scan it, it's in the ledger, so to speak, right? So there's great tools, but you have to build the habit. It's got to become just what you do. I mean, come on, today no one's without their phone. Okay, you have like no excuse. You're happy to scroll Facebook all day, but you don't want to enter your gas receipt. You know, you gotta understand that it's work. And if you do it, it's going to save you a ton of money from having to pay. You're going to make Roger's life a lot better, right? Because you're going to have the exacts, right? So when you're accounting for these things, right, you actually can see them and they're in a legit place, and it makes it easier, which becomes a cost savings, right? Because if you got to figure everything out, the proverbial box of receipts, okay, when guys dropping that off, that's a lot of work for an accountant. You're paying for that. You know, that's wasted money because you don't want to be organized, right? Absolutely. So it's important. I think, Roger, I mean, correct me if I'm wrong, but when you have a good tax pro and you're a business owner, it has to be, you have to work together in the sense like you as the tax pro said, here's what I need you to do and what to bring me. Okay, then on his side, it's like, okay, I got to put it into what kind of software. What would be the easiest way for you to disseminate all this information, right? So there's got to be a real kind of symbiotic relationship, right? So you can save money by lessening your work, Roger, right? Because you're getting everything in an orderly fashion. And then on the other side, you get to maximize your returns because you did it orderly. Is that kind of right?
Yeah, I think you're exactly right. One of the other biggest things, you know, I'm constantly having to teach people is how to categorize, because there's no standard way. There's just, I mean, the tax returns have standard things like office expenses, insurance, so forth, so on, legal, professional fees, you know, but most businesses, they don't fit, all their expenditures don't fit in that. And you also have to teach them how to read a profit and loss statement. I find that I do that a lot, teaching people how to actually, I tell them, you know, oh, you brought QuickBooks, fine, you know, that's cool. Print me out a detailed P&L, not just a P&L, a detailed profit and loss statement, because that breaks down how you categorize things. I want to see how you categorize things, you know, because see if we're doing it right. And I find when I do that and analyze that, then I can help them better saying, what is this little thing over here that you spent money on that maybe you shouldn't have,
Right.
There's things I can analyze in that. So we have to get to that point. But I think
Right.
the most important thing that a good businessman learns is if you are a good businessman, I'm not saying a good marketer, but I'm not talking about marketing and all that other stuff that most people talk about when they say good businessman. If you're a good businessman, you know at any day of the year exactly what your net profit is. If your systems are not set up enough that you can do that, you haven't reached the state where you're a good businessman. But if I can ask you, what's your net profit year to date? Boom, you can tell me within 5 minutes that, okay, you've got your system set up properly.
Right.
And there's not a lot of small business people that can do that when they're starting out, especially. But that's what you should be learning the first year in business.
Yeah, very important. And I will tell you, and there's that great saying, you can't improve what you don't measure, what you don't track. And that's what you're doing. Those books are tracking everything you're doing. Like you said, we can go in and we can find the holes in the bucket. We can see where you're losing. Like you said, why'd you buy this? Like I had a few of those instances. Why did you buy that? Why did you spend $41,000 on a website? That seems stupid. Okay. So that was e-commerce. What do I know? But I mean, it's dumb stuff like that, right? But having it in the right place and understanding why it's there. So what I would say to that is like, this is your self-learning homework. Okay, you want to get in business? Like that should be like, where's the course for that? You create a course. There has to be like simple courses because you kind of got the community college. You can go learn things. They don't even teach that very well. But today there should be an online course you can get in to do P&Ls. Oh, here it is. This is how you read it, going into detail. Should be something simple like that. I really haven't looked, but maybe if it's not there, I'll make one and sell it for $25. People, but when people need a resource to kind of get these business basics to start, kind of get a little bundle of stuff like, and it's these bare bones things like you just were talking about. Know how to read that. Had the ledger, right? Had the spreadsheet. You've got to have this stuff. Like that needs to be your intention because I know for me, starting multiple businesses, the excitement of starting a business is about the product or service and selling it, getting out and doing it and getting income and seeing the green in your hand. But I was really big on pushing all that other stuff to the left of my desk or kind of having other people do it or I'll get to it and it can cause some big problems, big problems. You don't feel it in the beginning, but year 3, you start to feel the squeeze because all of a sudden you didn't do a year or 2 of tax returns and now you got to account for that and you haven't. And then, oh my goodness, take my word for it. It's a bad place to be. So any other recommendations for the startups?
Recommendations. Educate yourself.
Yeah. So just that, but so we've got those first couple, as you progress, trying to think of the right question here. What would you say? This is hard because you can't put a hard number on it because you don't know the business. But in general, what should someone be expecting? Like you said, you could lose 40 to 50% of your net to tax, right?
Right.
If you're not doing this properly. So what should someone? Ideally, what should it be? 24%, 22%, 12%, 30%. What would be an average of someone who's doing it right?
I don't think that's really hard to answer. I don't
is there
know
a range?
I think that you should probably keep it to 25% if you can.
Yeah.
It depends, and it also another big thing. It depends whether you're in a low income tax state or a high income tax state like California or New York. It can make a vast difference in the amount of taxes you're going to pay. You have to realize if you want to live in one of those states, then you're going to pay a lot more in business taxes than you would in a lower state like Florida or Texas.
Right. That's why there's such an exodus from California to Texas and Florida.
Yeah.
They were losing so many. I mean, from the simple business, they were out of U-Haul trucks. Okay, they're all going one way. No one was going back, so there's no more rentals for you.
I read that. Yes.
Ray, isn't that crazy? Like this.
Yeah.
Those are our real world indicators. Although the U-Haul trucks left and didn't come back. Okay, so it's just, you see this stuff. Illinois was like that too. I finally had to leave Illinois. It was just too much for me. I mean, there's more hands in my pocket than I care to remember. They just weren't a business friendly state. So hopped across the border in Wisconsin, so that's much better. But yeah, you're right. I think I think from a range standpoint, I think that 25% is a good number. If you can shoot for that, you're doing well, right? There may be other, here and there and stuff, again, depending on the state, but I kind of like that. But when guys are losing 40%, when they're leaving that on the IRS table, I mean, that's crazy.
And
that's
generally,
a lot of money.
Yeah, generally that happens when you have service-only type businesses that have no real overhead to them, especially like computer businesses and things like that don't have any real overhead to it. So you have to, and I mean, if you're going to do that and you're going to make your money that way, then you have to plan for it,
Right.
But make some strategic investments where you need to try to mitigate it. But it's harder to do. You're going to pay higher than the guy that has a storefront or has service vans that have to drive around and things like that.
Yeah, good point. Good point. When you're just making money for money's sake, like consulting, you get in a high-end coaching business consulting, and hey, you're bringing in $300,000-$400,000 a year, and there's, and you're working at about a 3% overhead. Okay, that's a lot of cash you got to do something with.
Yes.
That can be taxed. You can lose a lot of that to tax. So that's a whole other conversation. We could do another episode. But that kind of stuff is what's out there. But I think it's been really valuable, Roger, just in the basics and really understanding who you're connecting with from a tax standpoint. Again, there's tax planning and strategies and all the different things. But, I just want to encourage people. I don't have a process for that. I don't think you're doing well enough, and I'll go to the next guy and the next guy. And, some people, they're paying attention, some aren't. Some have meetings every month with you. There's a lot of my clients have tax strategists, they have tax planners, and they have meetings every month. And they're checking the P&Ls and they're seeing where they're at and everything else. So there's programs like that out there as well. And those are really helpful because you're kind of forced to go to a meeting. You have these meetings once or twice a month, and they go through the numbers and they show you where you're at. So if you're really you're too busy doing the thing and you can't take enough time to learn it really well, those could be situations for you too. I don't know if you do that kind of stuff with your clients, but it seems to help my clients a lot when they've got someone holding them accountable multiple times a month to make sure this stuff's on point. That seems to have done really good things for them.
Yeah, I think you should meet with your tax account at least twice a year. During tax season, of course, you're going to meet with them and go over the prior year's results, but you should also be meeting them to like an October, November time frame minimum. So to go over what you've done and projecting on the next year. So if you need to make some changes before the end of the year to save you on taxes, you still have time to do it. Don't wait until the next March comes and then say, oh, I wish I could have done that. You have to be proactive on these things.
Yeah. Very important. Very important. That's awesome. Good stuff. Well, Roger, this has been awesome. This has been great. You brought some real value to our listeners, and I appreciate that very much. It's not always you get good people of your caliber, with your experience and your insight. And again, I like you building that relationship, really getting to understand their business. I think that's a key factor. And I think not everybody does it, but if anyone in the audience is listening, they're looking for that, they need to ask. Do you want to know about my business? No, I don't need to know any of that. Okay. They keep looking. Maybe you can find a guy who yeah, I should understand it. Or say, oh, I've worked with 4 other landscapers. You're a landscaper. I know exactly what you do. And they can tell you whatever. But I think that's a big takeaway from this too. So But really awesome. Well, how can they reach out to you? Can they follow you? Maybe even talk to you about maybe hiring you? I don't know if you do remote work and all that stuff as well, but share
I do.
a website or whatever you got.
I do virtual consulting for several people. I also actually wrote that course you wish somebody had.
See? Look, I didn't even know. You're holding out on me, Roger.
So, yeah. So my main website is seagulltechnologies.com. It's seagull spelled like the bird, technologies, which is plural.com. And if you'd like I wrote a little manual called The 3 Pillars of Building a Business Foundation, which is what my college level course is all about, but it's free. It's seagulltechnologies.com/free. You can just download a copy of that and take a look at it and see if you're doing what you need to be doing to build a solid foundation.
That is awesome, and everyone should take advantage of that. Okay, just read it, check it with your finger. If you're not, you know where to begin, right? And when they're pillars, they mean something. We call them pillars. They hold up the building.
They do hold up the
supporting a lot of weight. And your business is a very large entity. And it needs you need that structure to hold it up. And Roger's got 3 of them. And that's awesome. So that's fantastic. Thank you, Roger, for that. And again, thanks for coming on Sharpen the Spear. This has been a really great conversation. I know my audience got a lot from it. So, guys, we'll see you on the next Sharpen the Spear. Have a great one. And don't forget, revenue feeds the ego, profit feeds the family. So if you want to see how I can show you at least $100,000 in hidden annual profits in less than 3 minutes, and not only show you where, but how to create that 100K in 6 months or less without additional advertising or marketing spend, guaranteed, just go to sharpenthespearcoaching.com. See how truly simple it is. That's sharpenthespearcoaching.com. Do it now.